Well, good evening, all. I'm Epstein, and here we are with your evening metal market wrap-up. And this wrap-up is for Wednesday, the 14th of December, 2022. So it's about 6:20 in the evening, and sitting back and looking at what's going on. Before I go into everything for you, let me show you what you have on your plate tomorrow. This is what's coming at you. Jobless claims, the New York Empire State Manufacturing, advanced retail sales. You've got the Philly Fed Index. You've got the Federal Reserve monthly industrial production. You've got October business inventory data. You have the natural gas storage, and then you've got the first thing coming at you, the Bank of England and the European Central Bank, their monetary policy decisions. So I know you think it's going to be an easy day. Normally, what I wait for is the yin-yang impact. I like to see we do something in the Fed meeting, comes out at 1 o'clock, 1:30 the Fed press conference, it ends 2:15, 2:30. The markets in Asia's closed, people wake up, they'll trade it, goes to Europe, they'll trade it. But here's the difference this time. Too much going on in Europe. You got two big central banks. What are they going to say about things? They're both expected to go up 50 basis points. What does that mean for the dollar? Bullish or bearish? Going in, you're up again, and you're up nicely in the euro. This market's been rallying, and so is the pound. So far, the foreign currency markets are saying what I've been suspecting. The dollar has made a top. The Fed is going to continue going, and now we'll get into what happened today. The Fed is going to continue raising interest rates. They will go up probably in the neighborhood to 5.25%. Some members out of the 19 that did the dot plot, 7 of them, that's not a few, wanted it higher. Will they get their way? Will the data do what it wants? As you know, you're going to have to be data dependent. Unfortunately, and it is not good. The unfortunate thing is the Fed history of getting these things right and preventing a recession is terrible. Absolutely terrible. It's a moving target. It's as much an art as a science, trying to figure out when you stop rates, when the inflation will fall, where does it get sticky? Did you do enough? Do you have to go again? And we're in a cycle. Here's the cycle that you have to be careful of as we watch the market. Everywhere I look, people are getting raises. Another union comes on, they get a 20% raise. Well, so we're into this part where, as the Fed chair said today, you're missing out on 4 million people working. 500,000 might have died from COVID. The other part, for whatever reason, retirements and so on. And those that have workers are scared to let them go because you can't get them again. And if the economy doesn't get as bad as the Fed thinks, what happens is you need your workers to make your business. Otherwise, you got a major problem. So we're in it. We're in the wage price spiral that creates the inflation, and the Fed's having a heck of a time breaking through it. And the only way you can break through it, unfortunately, is break the economy in some manner. And that's what they have to do. So what does that mean for the hard assets, the metals? Okay. Gold is still hanging here in the 1820 area. Silver's still staying over $24 an ounce. The copper's in the 380s, not the 340s. And by the way, in Peru, keep your eye what's going on there. I did a write-up on it tonight. Now they've got a 30-day emergency period in the country from all the unrest as to what's going on. That gets out of control. You lose copper supplies. You lose copper supplies. A floor's going in front of that copper before you know what's going on in terms of the cost. Bonds and notes, I think they're trying to digest what the Fed said today, and will they be able to pull off what they wanted to do? So let's take a look if we could, and we'll go here to the weekly chart first. And as you can see, gold is doing well. Going into the end of the week, it's up 0.5 percentage point. Not stellar, but it didn't lose anything so far with all this bank information. Now, we have 2 more banks tomorrow, so still got to get through that. You can see how the market's hanging on here. The pattern is still higher lows, higher highs. You're fighting your battle right where I expected it to, and I told you to here, that you would fight at the 200-day average and then the Bollinger Band. And there's your Bollinger Band. You hit it 2 days ago. Now you're backed off. That's the next objective as long as the market can keep momentum. What bothers me on the chart is you're overbought. And it's not yet trying to embed. Embed means both numbers get over 80 and stay there. They get sticky, stay there for days, and the market launches. It's not what it's doing. So it acts to me as though the pros are taking some money off the table, waiting to get this to correct itself one way or the other. The gold-silver ratio clearly favors the silver. And a lot of people said, why do I watch this? Well, since this has been happening, this is what's been happening in the silver market. And unlike gold, you take a look at what's going on here. You can't count Thursday's data because we don't know how Thursday's going to end up. So I go back a day. But I can come back to today, Wednesday, both numbers over 80, both over 80. So the key is going to be tomorrow's close. If it embeds, then I get very bullish looking for even higher levels. Why not a 25 in front of that? So that's one of the markets I'm gearing on. Can the copper get up and develop an embedded reading? It's too early. It's fighting it just like silver and the other markets, 200-day average. What's it going to do from here? But this is a lot more bullish than bearish. Another metal that's in that camp. What about platinum? This is the seasonal time when platinum normally goes up, by the way, and it generally does it well into January. Higher lows, higher highs. You're caught in this sideways action. I tell you to never buy an upper Bollinger Band. Won't change my opinion now. But give me a good break, and I think, and I've said it, I think the pros are buying here at that 18-day average, which stops under that low. And look at how narrow you've got in the palladium market. I'd just stay away from that. When markets narrow in like that, they're going to churn, and they generally tend to hurt you. Now, what about the dollar? Well, it's very oversold. Down to the band. It's not a day to go into the currency market tomorrow to see what these central banks do and what the reactions are. I wouldn't recommend that. So what would I recommend? Well, it's pretty simple. You take your cursor up at the top here and get some of our free offers. There's a slew of them. Just move your cursor up. You'll see the icon. Give it a click. You can choose from our charting software, charts of the day, special reports. They're just there. There's a whole slew for you to look at. Give it a click. I'm Epstein. I'll see you tomorrow.